All right, let's try this again. Welcome, everybody. We had a amazing boot camp today. We went over a lot of key things. Y'all asked some great questions. And at the end of it, I was like, did it record? All right, because usually whenever I do a Zoom, um, it automatically records. But since I tried to be efficient with Zoom, I tried to schedule a meeting. Everything worked perfectly. Those who signed up had access only, so it's not with the normal link that we use. Um, and that one doesn't record automatically. So now I'm going to do it again. Um, Now, of course, I won't be able to get y'all's questions and things like that, which is unfortunate. But yeah, I do apologize for that because it was not supposed to be that way. But we'll still go over the key things and move forward. So, again, we are going over A plus strategy and silver bullet. Um, A plus strategy. No, actually, I'm gonna do it in the same order. We're gonna start with silver bullet. So here we are. Silver bullet has some specific rules that we need to follow. Um, Whenever you have an entry for a silver bullet, you need to make sure the entry and the liquidity is at least 10 handles or 40 ticks. So, depending on what type of chart you're on, you're going to count in ticks, or you could just count $10 away. With NQ, that's not really that far. So, really shouldn't be a issue. And of course, after we go over all these rules, I'm going to go over them with the chart as well. So first rule is 40 ticks or $10, or however you like to count it. I know a lot of people come from the Forex space, over two futures. So you might know handles or pips. So yeah, you can calculate it however you like. And then we're looking for entries at fair value gaps. That's the main thing. This is sort of a strategy where you is meant for limit order traders, but market order traders can take this as well. So there are three specific time frames that we look for setups when we are going to look for an entry off of a fair value gap, and we are going to count the handles or the ticks are going to be up to three times a day in specific windows. So you have the London session, which is 3 a.m. to 4 a.m. You have London and US session, which is 10 a.m. to 11 a.m. And then you have strictly the US session, which is 2 to 3, also known as power hour. So you may hear that term floating around. So that's what that is. This is going to be taken on a 1 minute time frame. And the way we look for it is we wait for liquidity to be taken out from one side, and then we are waiting for a reversal to possibly take out the liquidity on the opposite side. This is a reversal strategy, so keep that in mind. This goes against all trends and bias, and well, not really bias, but it goes against the trend for sure because we are waiting for this setup to happen to be able to take an opportunity at a reversal. So after we have liquidity taken out, we are waiting for a displacement, which is market structure shift, change of character, or a break of structure. I will go over that specifically as well. And then we wait for the gap. And then we place our entry either at the top of the gap or the bottom of the gap, depending on the direction that we are trying to go. Um, Stop loss would be at the previous swing high or low, depending on which direction you're going. And targets would be either 2 to 1, or you could target the opposite liquidity point. So if it was an uptrend, you could either go 2 to 1 for sales, or you can go to the complete liquidity point from the previous session. And we will go over all of that. So now let's hop onto the charts and go over this side by side so that way you know what I'm talking about. All right, cool. So here we are on the chart. So on this chart, I have removed the VWAP and I removed the 50 SMA. It's not needed for silver bullet strategy. The only indicator, if you choose to use, is the swing indicator. That's the only one that you're really going to need to use. It kind of just helps to see the pivots a little bit more easily if you are still not really sure on how to spot those during a live market. I do recommend that you learn to chart these swing highs and lows on your own because they are you don't want to be a slave to an indicator. So technically, your chart should be kind of somewhat empty, maybe one or two indicators tops, if you do choose to use. So, but for the meantime, you can use this swing indicator. It's relatively accurate. Sometimes it just plots out extra swings that may not be the true swing point, but it's still good to use. So the only lines that we are going to pay attention to on the chart are the vertical lines. The horizontal lines are some unmitigated levels that are always on my chart until they are tapped into, but they are not needed for what we are about to go over, which is silver bullet. So I have already marked out these vertical lines on the sessions that you should be marking out if this is a strategy that you want to implement. So these are just random days. I haven't even looked at if there are any good setups or not. We're just going to go back as far as we can. So this is October 31st. I think I have 50 days loaded. So this is where the chart brought us to. So the first window or opportunity that you have to look for a silver bullet setup is going to be the London session, which is 3 a.m. to 4 a.m. Now, since the 3 a.m. to 4 a.m. is the window that we're looking to enter a trade between those specific times. Now, keep in mind, throughout the year, London has their own daylight savings time. So it's kind of confusing on when to, excuse me, it's kind of confusing on when to actually know when this window is because US has daylight savings time. London has their own version, and London has sort of two different markets. They have their normal stock market and the futures market, and they open and close at different times, just within an hour of each other. So, just to keep it simple, you look from 3 to 4. That's just going to be the standard across when you're going to look for this setup. So as you can see here, we have 3 a.m., we have 4 a.m. So the previous session that you're going to look to see if price actually made a liquidity grab, which simply means that price took the previous session's low or high. So the previous session is going to be from 12 a.m. until 2:59 a.m. Right before our window starts. So as you can see, that previous session low is here, and the previous session high is here. And you can see here that this is 12 a.m. and down here is about 2:59. That's the kind of the minute that you want to look. Technically, it's 2:59, 59,999, 2 a.m. 59 seconds, and all the decimal points that come after it. That's technically how it works. But just to keep it simple, just mark it from 12 until 3. And then after 3, just look for price to actually take out one of these points. So our first window is right here. Now we see that price took this low. Where's my arrow? So we see this candle right here closed below this previous session's low, right? So you always want to look for a candle close, not a wick. So this is a strong candle close right there. So that is a perfect example. So now we have, if we go back to our rules, one of the first rules is you wait for your window and then you wait for a sweep of liquidity from the previous session. So we have two out of how many rules? Like seven rules, six rules. So we have two checked off on our box. So now we're looking for, okay, price took this. Now we're looking for a reversal. So to have a reversal, we need to look for market structure shift. And again, a market structure shift is now going to be when price comes back up after taking this low right here. Excuse me. We're looking for price to come back up and close above a previous swing high, which are these turquoise color dots right here. So this is our target that we're looking for as far as a candle to be able to close above it. So if you look, this candle right here actually closed above it, right? So now we have another box checked. So now we're looking for a nice displacement, which is a fair value gap. And these are the type of gaps that I like. I like for the candle that closed to be a part of the gap. So we have our gap right here. Let me draw this. So right here is the gap. So that would be another box check. So now we have our fair value gap, and now we want to make sure that this entry, because our entry would be at the top of the gap, is at least 40 ticks away from the previous session's opposite liquidity, which the entry is right here. Now this needs to be 40 ticks from here because we just took out this low. Now we are, because this is a reversal strategy, right? So now we're looking for a price to possibly go up and take out the previous session's opposite liquidity, which is going to be the previous session's high in this case. So if you aren't able to like visually see if this entry is 40 ticks, you can just get out a ruler on whichever platform that you're on, and it needs to be at least more than 200 bucks on the trade. So this one is 675, and the way I got 200 bucks is it's 40 ticks. Each tick is $5 on NQ. So it's going to be 200. So as long as it's more than $200 away from that previous session's opposite liquidity, then you're good to go. You can look to enter the trade because it meets those minimum requirements. Um, Also, just a note, I don't think I said this on over the live bootcamp call. This can be taken on ES as well, and for ES, it's the same. Everything's the same, so you could do the same strategy. You still want to look for everything to be the same. So just keep that in mind if you are someone who likes to trade ES or S&P 500. There are some other things you could trade, but I don't necessarily look at those too often. So it's not something that I really just kind of go over. I only trade NQ. I used to trade ES, and I used to trade this specific strategy on ES as well. So now that we have another checkbox marked off, now we are looking to enter into this trade. So because we have 3 a.m. and 4 a.m., this is actually still within our window. So our stop loss is always going to be, in this case, we're reversing to go back long or bullish. So we're looking for our stop loss to be the previous swing low. Our entry would be at the top of the gap, and we just wait for price to tap us in, and then we look for either price to take out the previous target or the previous liquidity, which is over here, or a 2-to-1. Now, this trade is quite big for the risk. So in this case, I wouldn't go 2-to-1. I would only target this previous liquidity right here because that is quite a large trade. So we did get tapped in because it made the gap in this second candle right here. If we look, so this candle right here, these three, 1, 2, 3, made the gap. As you can see, this box right here. And when it made the gap, this candle right here actually tapped in and put us into the trade. So we would have been in right here, which is good. So now we are in the trade, and now we just let the trade play out. And let's see what it does. The main thing is you want to place your entry between this window. If the trade hasn't won or lost yet, you can let the trade play out, and or you could take profits. It's really up to you. So let's see what this one did. All right, so this one was a successful trade. It did take quite a while. We entered here at 3:54 a.m. and the trade, because we were trying to target here, actually hit at 7:43. So this was this was almost a what 4-hour trade. Yeah. So this is when you just kind of either take profit or let the trade play out. I'm a big advocate of letting trades play out because sometimes it just you got to give your trade enough time to actually do what you want it to do. So this one was a good one, and it actually let me put this back on. If we would have held for the 2-to-1, it actually would have hit the 2-to-1. This did not hit the stop loss, and then it came back up to actually hit the 2-to-1 after the US Open. So that was a pretty long trade, like 6 hours. If you would have held this trade, you could have made $1,620. So yeah, that one was a good one. Let's go over another example. All right, so now that one was good. The London session was a winner. Now let's look at the first opportunity for US and London together. So again, you got to look at the previous session high and low. So now if we go back, London's previous session was from 12 until 3 a.m. Now the New York session, previous session, is going to be the session after the London Silver Bullet. So London Silver Bullet was between 3 and 4. Now you go from 4 until 10, which is why we have the lines. We already had the 4 a.m. line right here, the vertical line. And now we have our 10 a.m. vertical line right here. So now we're just waiting for price to take out the high or the low. So first we're going to market our high and low. So this is the high of the previous session right here. And then we have the low of the previous session right there. So obviously this one took out the high in between our window of 10 and 11 a.m. Eastern. So now we're looking for the same thing, but opposite. So we have price going up. It's kind of bullish at the moment. So you can see prices going up. So now we're just looking for an opportunity to get into a sell because this is a reversal strategy. So we just go back to our rules again, and we're looking for market structure shift, which is price closing below a swing low now. So this one was pretty bullish, and we only had this um, this low and this low right here. So those are the only two lows that were formed between 10 a.m. and 11 a.m. And neither one of them were even close to being crossed. So there was no silver bullet set up for this New York session. So now if we go over to the final session of the day, which is US only, or also known as Power Hour, we could see if this one possibly gave us a setup. So now we look for the previous session's high and low. That's the first thing that we do. And that's going to be from the London and New York was from 10 to 11. Now we go from 11 until 2. So we already have 11 marked from our previous silver bullet window. Now we have 2 p.m. and we're just looking for the low and the high of in between that window. So the low is right here and the high is right here. So now in between 2 p.m. and 3 p.m. Eastern, we're looking for price to take out either or the low or the high and then reverse. So if we look, price actually did in fact take out the previous session's low, which is right here. Um, yeah, all these pretty much all these candles took out this low right here, right? So now we're looking for price to sort of go up now because again, this is a reversal strategy. So now what are we looking for? We're looking for a previous swing high to be taken out. That's going to give us our market structure shift. So if we look, we did in fact um, get some new highs, but these, if you could see, these are only wicks. So we did not get a body close above any previous session high, unfortunately. So there was actually no trade there. So let's go to another day. We're going to go to another day here. So, because that day is over, so let's mark it. That is the weekend. So here is our new day, which is going to start with London, the 3 a.m. to 4 a.m. So we mark out our time frames from 12 until 3. We're going to look for the low and the high between those times. There's the low, and here is the high up here. So this one did take out the low. This candle was the one that closed right here, and it took out this. So now we are looking between the 3 a.m. and 4 a.m. for a high to be taken out, and we did not, in fact, get it. So that's not a trade during that session. So before I move on, I do want to point out that this is how I trade the silver bullet. So if you look on YouTube, you're going to see a lot of different people trade it differently. I will go over one other way that somebody that I know who traded with me for a while was actually trading it. They actually don't wait for structure. So what that means is they actually just wait for um, price to be swept, and then they wait for a gap, and then they're in the trade. So I'm gonna show you what that would actually look like. So remember how on this one we did not have any setups. So if we look at how he does it, because the previous session high was taken out right here. And now, since the high was taken out, he's looking for the first bearish gap that forms, and then he's looking to enter a trade. So what that would look like is something like this. So we took out the highs and we're looking for bearish gap, which here's one right here. And right there. Yeah, so if this one would have came up a little bit higher, then yeah, he would have been in that trade for a sale. Obviously, this one is one of the ones that left without you, but it would have been. It looks like it would have been a nice trade. Yeah, it would have hit your 2 to 1 right there, and you would have been out the trade. But this one did not pull back to the entry. So that's kind of one of the unfortunate things for limit order traders is sometimes the trades just leave without us, right? Like it is what it is. If we look at the next session, which we already have it marked up, that's the high, this is the low. So now we would just be looking for the first gap, the first bullish gap, and then we would be looking to enter the trade. So the first bullish gap was right here after price took out the liquidity, which was right here. So all these candles took this out, right? So now he's just looking for the first bullish gap. The first bullish gap is right there. Price did in fact come back and tap into it. The low was right here. Your entry would have been right here. You would have been looking for a 2 to 1 or the previous session's opposite liquidity, which was way up there. So this one, in fact, hit TP1, and then it would have took you out of the trade right here. So if you didn't take profit up here, then yeah, it would have took you out right there. Yeah. So then it was the weekend, and let's see our next one. So this was the one. Okay, so this is where we were here. So price took out the low, and now he would just be looking for the first bullish gap that happened after price took out the low. Well, actually, the one that closed below the low. So, which would have been this one. This was just a wick. So, you don't want to get faked out. This is not structure. This is just a liquidity grab. So, we're looking for actual a candle close. So, we don't want to be caught when they're just trying to do a liquidity grab. So, actually, we would wait for this one, which did give us a candle close below this previous session's low. So, now we're just waiting for the first bullish gap in the opposite direction. So we are going to find that. And there's one right here. And another one up here. So we are going to take the first one, which is the breakaway gap. Entry would have been at the top of that gap right there. Price did tap you in on this candle right here. This is the candle that tapped you in to the trade. And then this trade did hit the TP2, and you would be out the trade, because that's the from what I have known from my experience trading it. I'm only looking for a 2 to 1. That's it. I don't even try to go for a huge trade or anything like that. Just 2 to 1. I kind of just stick to the rules on that. Very precise and a lot of precision going on with it. So yeah, so now if we look at some other examples, we have London and US now, because US Open has happened. So now we're looking for uh, this next window opportunity for a silver bullet. So now we're going to do the same thing. We're going to look for them for the previous session's high, which is here, and the previous session's low. which is there. And we're looking for between 10 and 11. Did price take out either of those? So if we look here, price in fact did not sweep the high or the low during that time. So there's no silver bullet set up there. You got to wait until 2 and 3 p.m. now. And just by quickly eyeballing, I see the same thing. So this is the previous session high. This is the previous session low. Now in between 2 and 3, did anything in here take out this or this? We could easily see that nothing even got close to taking it out. So now we just have to wait for the next day, which is London again, and we do the same thing. So, I mean, at this point, it should be becoming more repetitive for you, and you'll be able to actually be able to do it faster. It took out the high right here, but by the time it took out the high, it didn't give us any sort of reversal pattern before our window expired, which is 4 a.m. So this line right here is your cutoff for entries. So we just wait. Sorry. We just wait for our next window, which is going to be US and London. And now we do the same thing. We mark out the highs and the lows. The high is right here, and the low is right here. So now our window of opportunity is from 10 to 11. So now we have a little bit of action going on. So we see that price did in fact close above this high, previous session high on this candle right here. So now we're looking for structure and a gap, or you could just look for a gap and entry. It's really up to you. Both are okay. I'm kind of like kind of stuck in my ways, I guess. I like structure. Structure makes sense to me. It's like an extra confluence. So it's really up to you. But both are good options. So we'll start looking for both setups. So we have, if we're looking at the first um, option, which is waiting for structure and then a gap, um, we have structure right here. And also the same candle created a gap. No, sorry, this one right here. Sorry. Yep, this one created the gap as well. So it's a little tiny gap right there. And now if we do this, our stop loss would be previous high. Our entry would be that bottom of that gap. And we would be looking for a 2 to 1. This one is sort of a big trade, so I don't know if I would have held it all the way to 2 to 1. But either way, it did not make it. Doing it my way, which is waiting for structure. So now, if we look at the other way, the first gap was, let's see if that was a 1 tick gap. No, that's not the gap. So this was the first gap right here. So that was the first gap if you're doing it in the way of not waiting for structure. And let's see what this one did. Our stop loss would have been the previous swing high. Yep, right here. And no, actually, no, that's not the high yet. The high is actually, see, this is what I mean on being able to know and see which one is a true swing, because the indicator would just kind of give you extra swings that you don't really need, but it's still good to know so you can avoid certain situations. So this is actually the previous swing. The reason why this isn't is because price never took out. In order for, yeah, this is actually one of the questions someone asked. I'm glad that this sort of came back. So when you're making swing points or pivots or whatever it is you want to call, so let's say you start with this low. So in order for this low to be confirmed, the previous swing high needs to be a candle needs to close above it. So now that this candle right here closed above this previous swing high, it confirms that this is now the new swing low. And now, in order for there to be a new swing high, there needs to be a candle that closes below this. So none of these up here are actually true swing points because it just sort of consolidating side by side. But it still is a good point as far as this one to be a swing right here. And pretty much none of these are swings. Actually, I take that back. This one right here is a swing. The reason why this is a swing is because now we have some pivot and price actually closed below this sort of consolidation area and then came back up. So that actually confirms that this is a swing. So if we were to put our trade on to see how this one would have played out without waiting for structure, this one did hit TP1, but then it came back to lose. So this one was a loser. And we move on to the final one of the day, which was Power Hour. Did I not mark that one? Yeah. So right here, 2 to 3. All right. So we do the same thing. We look for the highs and the lows. Also, if you need any assistance with trying to learn how to see these swing points without needing an indicator, I have a document in the educational resources section inside of the Discord. I put it together like a few months ago, but it's very detailed and it should get you on point to be able to see these pretty fast. So we could see this session didn't sweep anything, so there's nothing to go over here. But I think we went over enough examples. Let me see if I remember any questions. I don't know. I cannot remember. I sincerely apologize for not recording that boot camp. But this is actually we actually went over more examples here, so this is actually might be better. But again, you all can schedule the 101, and we can go over this in more detail. We can go over swings. We can go over pretty much whatever it is you want to go over. But I do recommend that you practice this. Oh, I do want to say, whenever you're looking for a setup, from my experience, I've noticed that whenever you see the first silver bullet setup, um, and it loses, if another one forms, that one is usually the good one, because the first one could just be some sort of manipulation, and then they are trying to squeeze sellers or buyers, and then they give you another setup, and that's the one that actually ends up giving you some profits. So that's just a little extra tip there. But that's pretty much it for Silver Bullet. I think another key point to remember whenever you're entering these trades is that you always want to make sure wherever your entry is that it's at least 40 ticks away from the opposite side liquidity. So that is very important to note, to make sure that you have a valid setup, because most of the time the whole basis behind the strategy is that you're trying to be in a trade when the price is targeting the opposite side liquidity. So if it's too close, it could just take it out that liquidity and then continue up, and then you can lose some money or your profits or whatever. So yeah, just keep that in mind. Hope this helps for those who were interested in this silver bullet strategy. And yeah, now I will go over to A plus setup in another video. So it's going to be two separate videos, but y'all will have both. So yeah, see you.